Hi everybody, I'm Sir GK Kilembi and thanks for joining me for the weekly US market reports. Time to trade the markets, the week ahead, perspectives and analysis. First, we're going to have a look at the economic calendar. Next, we're going to see what's left for earnings. And next, we're going to have a look at some news. And also, we're going to take a look at the Forex weekly performance, and before also the performance for the cryptocurrencies. Next, we're gonna have a look at the S&P 500 sectors map, and then we're gonna finish with some charts analysis, technical analysis, and price action. Okay, so now here we are. First on the tradingeconomics.com, and that's the economic calendar for the trading week beginning on Monday, August the 14th until Friday, August the 18th of 2017. On Monday in Japan, we're going to have the GDP growth rates quarter on quarter for the second quarter, and the GDP growth analyzed for Q2. Next on Tuesday, August the 15th in Australia, we're going to have the Reserve Bank of Australia meeting minutes. Next in Germany, we're going to have the GDP growth rates quarter on quarter flash Q2, and the GDP growth rate year on year flash Q2. In Great Britain, we're going to have the inflation rate year over year for July. And back in the US, you're going to have the retail sales month on month for July. On Wednesday, August the 16th, in Italy, we're going to have the GDP growth rate quarter over quarter advance and the GDP growth rate year over year advance for the second quarter. In Great Britain, we're going to have the Clement Counts change for July and the unemployment rate for June. And in the European area, we're going to have the GDP growth rate quarter over quarter and GDP growth rate year over year second estimates of the second quarter. And in the United States, we're going to have the FOMC minutes, the Federal Reserve Open Markets Committee. And on Thursday, August the 17th, in Japan, you're going to have the balance of trade of July, and we expect a surplus. So Japan remain in surplus. They have the Japanese economy, it's a physical economy, and they export goods principally in the United States. So you know that Japan has a surplus and United States is running a deficit. So by that you understand the relation between the US dollar and the Japanese yen. So for you guys who are trading the forex exchange markets, so you know how to trade that particular currency pair. Okay, so next, oh yeah, earnings. Let's see what's left. You see all the big players already had reported their earnings. So now let's see what's left. I'm gonna switch to the very, very important companies. Okay, give me just a second. It's over here. No, so we're gonna have a look. Gonna scroll down very, very rapidly to see the company, very, very important. You see over here we have GD.com. GD.com, it's also on it's trading in the United States under an ADR, so that's very important. Next, what do we have? Yeah, we have Coach, Q4 for Coach. Yeah, we have Home Depot on August the 15th. Very, very important. What else? We have TJX companies on August the 16th. Very, very important company. We have Cisco Systems. And what else? Yeah, we're gonna have Target and Alibaba on August the 17th. That's on Thursday. And what else? Very important. Yeah, applied materials. What else? Yes, Gap also. And Walmart, very important, and Staples also. But Walmart is pretty big, so that's very important. Okay, and on Friday, August the 18th, we're gonna have Deere and Company and Estee Lauder, Foot Locker also, and Yatkin Financial. Okay, so that's it for your earnings. The biggest company for earnings. So that's it. Okay, next, let's move on. Now we're gonna have a look. Yeah, let's switch a little bit and let's go and have a look at some news now. Let's go to businessinsider.com and let's have a look at some news. Here we are in Business Insider in finance, and let's have a look at some articles. We are not gonna read them, but just take a look at the greatest lines. You see a lot of fear in the markets. You see markets have been coiling, and there's some one big thing that could unleash volatility. You see the VIX popping up towards the 14, 15, and also you see that geopolitical tensions. You see, between the United States and North Korea, and you see a little bit of profit taken, in the markets. That's just the beginning of a distribution. You see the media are popping up fear, and a lot of people now are talking about taking profits, a lot of risk, and people are moving towards safe havens, like gold, for instance. We see a rise in gold. So next we're gonna have a look at the gold charts to see exactly what's happening. So news here, Barclays, Capital, but nothing. Oh yeah, take a look at that risk. Red Dalio from Bridgewater Associates LP. Red Dalio, risks are rising and everybody should put 5% to 10% of their assets into gold. That's what Mr. Dalio, the founder and founder of Bridgewater Associates, the biggest hedge funds in the world. Next, let's move on. See, we have a lot of hedge funds losing money. Here are the 8 biggest mistakes investors make. Here. Escalating North Korea tensions were a match to light the fire. Now markets are at a crucial crossroads. So that's it. Here, talking about the euro, Morgan Stanley, the euro will be worth more than the pound by next year. So for those for you guys over there trading the euro sterling currency pair, so that's for you. Here, what else? Yeah, news about Tesla, the Model 3. You already know what's happening with that particular car. Here in the cryptocurrency pair, here we have Fidelity. The 2.3 trillion investment giant is testing out new cryptocurrency services. So that's pretty interesting, very interesting. What else? You see, hedge funds are struggling to make money. What else? What else do we have? Yeah, technology. They're talking about driverless cars. Yeah, books, credit cards. Yes. So what else? Yeah, I think that that's it. Yeah, that's it. Yeah, Bitcoin meteoric rise is costing some investors billions. So you see that Bitcoins rose, and now we have a max historical max at $4,200 if I'm not mistaken by this morning. And so next we're gonna have a look at that when we're gonna do some technical analysis. We're gonna have a look at Bitcoin. What else? But no. No, so that's it. Okay, that's it for that. So let's move on. Nothing really interesting. So now we're gonna have a look at the currency performance. As you can see here, Bitcoin, BTC, USD. Bitcoin, well, the next price here for Bitcoin was $4,069, up $380. Last session, that's a 10% up. Weekly performance 23% up. Monthly performance, that's a 71% up. And yearly performance, that's a 589.5% up. That's huge. So that's the best performing currency in the entire world. That's the Bitcoin. As you can see, outperforming all other currency pairs and all other currencies. So Bitcoin is definitely number one. So that's it. Here you can see Bitcoin, and yeah, and the data is updated. So that's it. Bitcoin number one. So next we're gonna have a look at Bitcoin charts. Okay. So next, let's continue. Let's move on. Now let's have a look at World Coin Index, and we're only gonna focus on the top 10. You know, because there's a lot of cryptocurrencies, and we don't have enough time, you know, to focus on all of them. So number one, here we can see clearly Bitcoin number one, but on this particular page, I don't know if the price or not up to date. So please bear with me. So Bitcoin number one, number two Ethereum, number three Litecoin, number four Neo, number five Omisego, number six is Ripple, number seven Thanks, number eight Bitcoin Cash. You see the Bitcoin Classic is the classical coin. You see is rising up, but the other coin, the Bitcoin Cash, the BCC, is going down. And nine and on say number 9 you have Qtum, and number 10 Ethereum Classic. So that's it for your ranking. And as far as market cap, you see Bitcoin now, the market cap rose to 65.6 billion. So that's huge. And we have now 16.5 million coins. Okay, so that's it. Now let's have a look at the economic that's not the economic, that's the sectors map. S&P 500 sectors map. You see red except for Apple, in services Comcast, and take a look at over here, defense, industrial goods, Lockheed Martin and Raytheon, and L3 Technologies and Rockwell Collins, defense products. So people are ready for war, for nuclear war. So that's what the media is pumping, and you see those companies but are making huge profits because of all of the war talks. See, so that's it. So let's move on. Now let's have a look at the ETF weekly performance. Everything in red, and you see the inverse in green, so that's logical. The VIX in red, VIX rose 22% and almost touches the 14 points. You see the global miners over here in green, fixed income in green, and over here commodities, gold in green, GLD in green, SLV in green, and that's it. Okay, so now quickly let's move on, and finally we're gonna have a look at We're going to do some technical analysis, and first let's begin with the Dow Jones Industrial Average. You see that's red candlestick, so that's what it means. That means a bearish week. We are going down. And now let's do some price action. When we take a look, when you see that particular red bar, what can we say? What can we say about that particular bar? That bar, it's a bearish week. That's almost a reversal bearish candle, and then rejection bearish candle. So I think that we have a top over here at 22,000 points. So we have a new record high, and now, as you can see over here, close just on the 4 weeks moving average. And what I'm expecting for next week, I'm expecting more moves towards the downside. You see, as the world talks continue. So maybe we're gonna see markets going down, first of all reaching over here the 21,700. That's the region of the 8 weeks moving average, or maybe and next going down towards the 13-week moving average at 21,500. So that's my target. You see, 21,500. So I'm expecting market to continue to move down, and maybe we're gonna see another spike in the VIX, and that's it. So here now, that particular top, I need to move that top over here. So that's your 2200. Okay, so that's it for the Dow Jones. Now let's move on. Let's continue quickly. NDX, the Nasdaq 100. Nasdaq 100, exactly the same thing. Bearish week. Let's simplify. Yeah, let's zoom in. Okay, now what can we see? We see that that particular move towards the upside was completed. We reached our targets. Was Nasdaq at 6,000 points, and then you see here doji indecision going towards the downside. Here a complete bearish candle. We already are below the 4 weeks moving average, and now we reach here the 8 weeks moving average, interaction with the 13-week moving average, and now we are in a, I think we're gonna see a lot of sideways movement. You see, so sideways movements over here. See, like that. Okay, you see a lot of sideways movements, and maybe if we go lower, see, if we go lower, we can go and reach the, so I'm gonna remove that, and we're gonna put a, we're gonna draw an arrow. Okay, over here, the arrow, boom, like that, and that's it. So next week, what I'm expecting the markets to go like that. So that one in red. So yes, that's what I'm expecting. I'm expecting to see the markets moving like that. And if we continue, and if we see more bearish, if we remain in that particular bearish sentiment, so the market can go down below 5,800. So the target will be 5,700 and maybe 5,650 for the Nasdaq 100. So I'm expecting more moves towards the downside if all of the world talks, nuclear talks, you see tensions between North America, the USA, and North Korea continue. So that's what I'm expecting. And that's a great opportunity, you know, for investors to be taking profits, and that's it. Next, let's move on. Now the S&P 500. S&P 500, okay, exactly the same thing. You see as we saw earlier with the Dow Jones Industrial Average, and over here you see huge, that particular bearish candle, huge bearish candle. If you take a closer look, you see over here that great bullish candle. We are already at the 50% of that particular candle. So now what I'm expecting, same thing. I'm expecting more moves towards the downside. I'm expecting that particular movement. Boom. Oops, excuse me, like that. I'm expecting this movement. Okay. See the market continue to go down. You see that's your 4 weeks moving average over here. Over here, that's your 8-week moving average. And here now we are at the region of the 13-week moving average. Over here you have your 21-week moving average, and in black that's your 26 moving average. So now I'm expecting the markets to continue to move lower towards that particular region. That's it, that particular region over here. So market's gonna go down another 40 points and reach the 2400, 2410, 2400. So that's it. See, that's a huge bearish decision candle, a strong candle. So if you have a continuation, look for more shorts in the market. Okay, next let's move on, and now we're gonna have a look at the VIX volatility index. And oof, as you can see, huge spike, huge bullish candle. Remember the gap over here, the gap is filled. You see that particular one left us with a great pointer. You see, so now we were between a range. Remember, I told you we were in between a range of 9 points and 12 points. You see, remember all the moving averages were moving sideways. You see, without direction, exception for the 4 weeks moving average over here. I'm gonna amplify. We zoom in. Take a look here at the 4 weeks moving average. You see the 4 weeks moving average, it's pointing up, crosses over the 8-week moving average and the 13-week moving average. Now it's going towards the 21 and 26 moving average, and over here you have your 52 weeks moving average at 12 points, and 208 moving average and 104 moving average respectively at 40, 68 and 15, 17 over here, and a close at 1550. That's huge. A high at 1730. So that's a lot of volatility. So we need to be cautious and to be careful, because next week is going to remain highly volatile, you know. And I'm expecting maybe in an inside week candle with huge spikes, you see, towards maybe 17 or 18. So be careful, you know, when you're going to trade next week. So what it means, that means more moves towards the downside, spikes, a lot of volatility. So be aware of that. Okay, now let's have a look at the XIV. XIV and XIV, exactly the same thing. Over here, XIV, huge bearish candle, and this one is particularly big, great impact. You see, that's your over here. Let's zoom in so we can, you see over here, that's a close below your 4 weeks moving average, close below your 8-week moving average, close below your 13-week moving average, 21 weeks moving average, 26-week moving average. Over here we have a gap, and take a look over here, you have your 52 weeks moving average. So for me, that's clearly that's the target. See, so now what I'm expecting that particular move, but first of all I'm expecting a gap filling. You see over here, that gap must be filled between 70 between 71.30 and here 65, 60, yes, 66, 60, 65. So that's my target for the XIV. More moves towards the downside, and my target is the 52 weeks moving average area around 60 over here and 62. Okay, so that's what I'm expecting for the XIV, more bearish movement. Okay, so that's it. So let's move on now. We're gonna have a look at the Russell 2000, small caps, US 2000. Oh, excuse me. Okay, that's it. And over here also bearish week, as you can clearly see here on the chart. See huge bearish candle. You see same thing as we saw earlier with the XIV. You see over here a convergence between the 4 weeks moving average and the 4 weeks moving average and 8 week moving average. Over here we have your 13-week moving average. I was expecting more moves toward the downside below that particular, below the prior candle. And now you see here huge bearish candle. Here you have your 21 weeks moving averages and 26 below those particular moving averages, and now pointing and going in direction of the 52 weeks moving average at 1345 points. So you see that's your support region over here. So you see that we were in a wedge, see, like that. Excuse me. Okay, we were here doing this. That's a wedge up pattern. You see with this, and now you see below that particular trend line over here in green. So you see 1 week, that's your close below that particular trend line, and then a continuation, and then we're going back towards that particular region of the 1340 region of the 52 weeks moving average as a support. So now we're going to retest that particular support. Okay, so that's it. Russell 2000, technically speaking, we're going lower. So that's it for your Russell 2000. And now let's continue. Now let's have a look at fixed income. We're going to have a look at the 10-year Treasury notes. Okay. 10-year Treasury notes. Okay. And you see if now the fixed income is going higher. See, your bond is going higher. You see over here we are in a uptrend. We are uptrending in an uptrend channel. You see over here, remember I was analyzing that particular uptrend. You see here you have your channel, that's your support, resistance, support over here, resistance over here, support. We break below the that particular support. We came back in that particular channel. See her here trading towards the upsides, but in the support region of that particular uptrend channel. And then now we are back in. See, that's your 52 weeks moving average, break above, and then we're looking for continuation towards first the 208 moving average over here, and that's your 104 weeks moving averages. So here I'm expecting that particular movement that didn't happen 2 weeks ago. Now I'm expecting that particular move. So first of all, you see your 208 moving average at 127 is acting as a resistance, so we need a close above that particular level, and that particular level, that's a strong resistance, and then we're gonna see higher prices for your bonds, for your notes, your 10-year treasury notes, and you're gonna see the T notes moving up towards 129. Okay, so as we continue to see as people, investors, are continuing to sell the stock market, we're gonna see a lot of money flowing in and going in to the bond market, and that's gonna push bond prices up. But you also know that if we see higher bond prices, that means lower yields. Okay, remember that. So now let's have a look at the treasury bonds, 30 years treasury bonds. Not the yield, but here the bond future, the T bond future. And that's exactly the same scenario. We are going up. See, we are trying to come back here into the uptrend channel. We are just here, and if you take a look here, what do we have? That's the region of your 52 weeks moving average at 155, and we interact with that particular level, but now we need a close above that particular level, and we need to come back into that particular uptrend channel, and then we're gonna see more moves towards the upside. So you see over here, now we need this, see, like that, over here, bam, to see this. Okay, this one, oh, ciao, and this one now in green. Okay, so next week we need a close above 155, and take a look over here, we have the region of 157, so we need to come back and retest. Now we're retesting that particular channel support, now is acting as a resistance. We need to come back in and then bounce from there and go higher. First of all, we need to clear the 155 level, that's your 52 weeks moving average level, and next the 157. But if you continue to see a sell-off in the stock market, in the Nasdaq, and in the S&P Russell 2000, and in the Dow Jones Industrial Average, then a lot of money, people are gonna take profits and liquidate their position in the stock market, and then going into the bond market and other safe haven as gold and silver and precious metals. Okay, so that's it. So now let's have a look at the US dollar future, the DXY, DXY. Okay, US dollar index, and boom, over here. So let's continue with our analysis. You see that we are back towards at 93, and you see the range where we are trading. We are trading in that particular range. We have 93 as support, and over here we have our first resistance at 97, second resistance at 99, 100 points, and next 103, 104. That's our max resistance. Now we are back at the support level. So what to expect for next week? Next week, you see over here we have a type of indecision. Now we have a bottom over here. So now you see inside week candle type of range sideways movements for 1, 2, 3 and 3 weeks. We are moving sideways, so maybe that's our bottom, excuse me. And next, what we expect, you see now we need to expect maybe a bounce back, going back higher, but everything can happen. You see me, I'm still believing and that we can see the dollar going lower and reach 92 points, and from there, yes, the dollar can bounce back, or maybe that's the true bottom that the US dollar index is looking for. Okay, you see over here we already have a huge spike. You see, remember over here that particular candle in 2016. We already reached the 91.90, so maybe we can come back here to retest those levels and bounce back from there, or maybe we can bounce, but now I'm expecting more sideways movements. So that's it. We're gonna remain in inside week candles and move sideways, maybe for a couple of weeks, maybe until September, and next we're gonna see what's gonna happen. Okay, so that's it for the US dollar index, the DXY, and now let's move on to commodities. First of all, we're gonna begin with oil, the crude oil, WTI, sweet light crude. Okay, and oil, we already you know what took place last week, the meeting of the OPEC in Abu Dhabi, and those guys over there, the OPEC, are making me nervous because I had a trade. I was expecting oil to go higher, to reach $50. Okay, but next oil, I was expecting oil to move much higher, because they agreed to cut production and stuff like that. But you see, with those things, oil, fundamentally, we need to see a rise in oil prices, but you know that there's a lot of things, you know, happening with oil. Oil is really political, that's geopolitical, that's geostrategic. So you have a lot of things going on with oil, and you see that all of these situations have a lot of impact on oil prices. So that's what we are seeing now. Okay, so now I'm expecting, you see, we are back at $50 a barrel, a little bit higher. You see here some spikes, some max over here, and if you take a closer look, that was the previous pivot point over here, that particular candle on May of 2017. So now we are back at that particular level. So maybe it's gonna be another pivot point, or maybe that's just a pause. You see. So we have, for instance, I'm gonna draw that. So maybe that's just our first leg higher. You see, from here to here. Maybe we can expect some type of correction, maybe towards the to retest, you see, the resistance, the downtrend channel resistance, and to retest that as a support, and bounce from 46, maybe 45, and then continue higher. You see, and if you continue higher, maybe then we're gonna go back towards the 53, excuse me, and 54 as our resistance. So what we can see in the conclusion is that we are trading in a range with a bottom, a support at 43, 42, and a resistance, force resistance at psychological resistance at $50 a barrel, and next we have the 53, 54. So we have like a $6 to $7 range to trade in. So that's it. Oil is stagnating, you know, between those levels, you see. So that's it for oil. So that's what I'm expecting. So be careful when you trade oil. For shorts, as I said, I'm expecting a little bit of correction over here. If I see oil below 47.50, maybe, but there's a lot of risk, you know, in that particular trade. Below 47.50, shorts towards 46 or 45.50. Yeah, you see over here, also over here, maybe to retest that particular channel, downtrend channel resistance, to retest that as a support, and from there we can bounce up and going back to higher prices. first of all towards $50 a barrel, and next towards $53 and $54 a barrel. Okay, so that's it for your crude oil. Next, let's continue, let's move on. Let's do some precious metals. First of all, let's begin with gold. Gold futures over here, and that's it. So as you can see, gold rose towards $13 due to the geopolitical tensions between United States and North Korea. And as you saw earlier, we read earlier the article when Ray Dalio, the founder and hedge funds guy at Bridgewater Associates, told everybody to put 5% to 10% of their assets in gold due to geopolitical risk and risk also in the markets. So that's it. You see that a lot of people took action and react quickly, and now you see gold prices are rising again and are interacting and flirting with the $1,300. You see, one time, two times, three times, and that's the fourth time that took place. So now what I'm expecting when I'm seeing a strong bullish candle like that, I'm expecting gold to go much higher, to have a continuation. And that particular continuation, my target for me, it's first of all 1330 and next 1350 for gold. But first 1330, it's going to be great if you take a closer look and look at past performance. What can we see? We can clearly see that we already visited that particular point, you see, but towards the downside. So maybe now we're going to revisit that particular level, those levels. But first of all, we need to clear the 1300 level and go much higher from there, and that's what I'm expecting. So what the catalyst here? The catalyst will be more tensions between the United States and North Korea, and that's gonna spread, and that's gonna be something global. We're gonna see more sell-off, so more investors are gonna liquidate their position in the stock market. You see, they're gonna dump their shares and their stocks and ETFs and what have you, and then they're gonna put that liquidity, that capital, gonna flow into safe havens. So we're gonna see those safe havens are gold, silver, Japanese yen, and other stuff. You see, some hard assets. But first of all, the most famous safe haven, that's gold. So I'm expecting to see if that particular tensions continue. We are gonna see more upside for gold. Okay, so that's it. But remember, we already that scenario already took place. You see over here, that's a strong bullish candle, and take a look what happened next. Boom. You see that's a bearish trap, and then boom, they smash prices, gold prices down. You see, every time gold reaches 1300, but last two times, you see they smash price down. So maybe that's gonna take place one more time, but be cautious. So me, I'm ready to buy, and I'm also ready to sell. You see, that's a buy for me above 1300, and I'm gonna be selling over here at 1280, 1275. I'm gonna put some shorts if I see gold prices pulling down. So remember, take a look over here. We have all of the moving averages here in that particular region between 1260 and 1245. That's for your 8-week moving average, 13-week moving average, 21, 26, 52. That's your 208, and that's your 104. But one is missing. Excuse me. I'm gonna add one more. I want to do that quickly. We're gonna add the we're gonna add the 4 weeks moving average. That one is missing. Okay. And here, that's gonna be my 4 weeks moving average and the style. Excuse me. Okay. And okay, and here style, not in red. What's the color? Yeah, that particular color. Line, price. Okay, you see, that's it. That's the region of my 4 weeks moving average, and here at 1275. So that's it. If I'm seeing the gold prices approaching that particular region, 1275, and going down strong, I'm gonna put some shorts. But above 1200, 1300, that's a buy. Okay. And now let's move on. Silver. And for silver, exactly the same thing. You can clearly see the downtrend channel. Over here you have your channel support, over here your channel's resistance, and you see we are at the channel's resistance, break above that particular channel's resistance, and now you see strong bearish, strong bullish candle, and we reached the 1720, and now I'm expecting a continuation. And you see, if you have a continuation, first we're gonna come over here. First we're gonna see price, we need to clear that particular level over here, 1770, and if we clear that particular level, boom, we're gonna go higher towards 1860. So that's it. Okay, so that's what I'm expecting for silver. Silver more moves towards the upside. That's a strong bullish candle, and that's it. That's an engulfing bullish candle. So that means power, and that means a decision to move higher. Okay, so silver, I'm expecting more higher prices for silver. Silver is going up. And that's it for our commodities, oil and precious metals. And now let's finish our analysis with Bitcoin and Ethereum. First of all, let's have a look at Bitcoin. For the Bitcoin, we're going to have a look at Bitcoin versus the US dollar. We already had a look at the performance, Forex performance. We're going to have a look at Bitcoin versus US dollar, and also the GBTC, the ETF. And next, we're going to have a look at Ethereum versus the US dollar. So that's it. You see over here, I was expecting, I was expecting Bitcoin to hit, as you can see over here with my analysis, my technical analysis, I was expecting the Bitcoin to hit 3,800, and on other analysis I'm doing for French speaking people, I was giving the Bitcoin at 4,000. As you can see here, we have reached 4,200, so that's huge, another historical high for the Bitcoin. But now you see that was my projection. You see that's a $2,000 move, and maybe it's time for some profit taking. So you see, in the past that already took place. You see over here, after moving from $1,000 towards $3,000 over here, top at $3,000, you see a distribution that means profit taking. And next, correction. For those of you guys who love Fibonacci, that's a 50% correction from 3,000 towards over here 2,000, 1,800. That's approximately a 5% correction, a 50% correction. And next, from there, another leg up. So that's your pattern, your A, B, C, and D pattern over here. And you see we're well above $4,000. That's a psychological level. So now I'm expecting more sideways movement and maybe profit taking. So a distribution can take place. So take a look. We are far away from the 4 weeks moving average. We have $500 spreads, so that means a lot of volatility, and we need to interact with those moving averages. Over here you have your 4 weeks moving average, over here your 8-week moving average, 13-week moving average, and take a look over here 21 and 26. First of all, we need to interact with the 4 weeks moving average and 8-week moving average. So that's what I'm expecting. So I'm expecting sideways movement. Maybe we can have a spike higher towards 4,200 and or maybe 4,400. But next sideways movement, a little bit of distribution to interact with the 4 weeks moving average at 3,500. Maybe at that time that particular moving average is going to be around the 3,600, maybe 3,800, but 3,600 is going to be it's a good level. See, 3,600 and the other one at 3,200. So that's it. I'm expecting a correction for the Bitcoin. So now let's move on. Let's have a look at the GBTC. And next we're going to move towards, and then we're going to finish with Ethereum versus the US dollar. GBTC, Bitcoin Investment Trust. So that's it. And over here, as you can see, that tracks the Bitcoin movement. So up, it's going up. You see over here, we have a huge bullish gap between 473 and $517. So that's it here. Strong bullish candle. You see me, I was expecting for next week to see the GBTC trading a little bit higher and to go, you see over here, above 630. That's a buy, and go towards $660. You see, for $30 profit. But let's see what's happened. You see over here, the week it's already opening, and we have an open at $616. So that's it. So now let's see how it's gonna evolve from here. Okay, but I'm expecting more moves towards the downside. But take a look also over here. What do we have? We are far away from our 4 weeks moving average. We are at the 4-week moving average is at $530. So that's very, very far. So I'm expecting more, maybe an interaction. And also take a look, what do we have? We have a huge gap over here, and all gap must be filled. So be cautious, okay? And now let's finish with Ethereum, ethos versus the US dollar. Let's see if we have GDAX over here. Okay, that's it, because I have my presets and all my analysis done with GDAX, and that's it. You see over here, that's your correction. So that's just distribution, profit taking. You see over here, we have the top at 375, yeah, and max at $420. Over here, correction. See the support over here, bounce higher from there. You see inside week moving type of sideways movement over here. That's your accumulation phase, and next you're going higher, going back towards that particular resistance. And 2 weeks, 2 bullish weeks over here, 1 and 2, and now you see the opening, and we are going lower. We already mark some lows, and we have a low at 290, and that's it. So now we're gonna see how it's gonna evolve from here. And as you can see over here, we have our 4 weeks moving average and 13 weeks moving average at 260. Down there, here you have your 8 weeks moving average, and take a look, that's your convergence points at 245. And over here you have your 21 weeks and 26 weeks moving average. But we are expecting the trade is going to be like that, above $320. That's a buy, and buy towards the resistance at 370. Okay, so people, once again, thank you, and see you next week. Have a great trading week, and take some profits and manage your risk. Okay, have a good one. Ciao, bye.